Hey guys, what's going on? In this video, very important subject, which honestly I should have addressed a long time ago, but we've been busy trading and the last couple of days the market is sideways. So I'm getting various questions from some of our traders, and here's the question. The question is, if someone is buying 5,000 calls on a particular stock, does it mean that the stock is about to go higher? So eventually, if you see, wow, sounds like, wow, 5,000 calls, man, that's a lot of calls somebody's buying a particular stock. Does that really translate that you should be bullish on the stock? Does that translate that you should be taking the opposite part of the equation and be bearish? What do you do with this information? So especially with a lot of services out there that advertise, well, we keep track of all these options activity, guys. There's a lot of myths out there. So I'm about to really break it down to you and exactly how you could decipher what to do with such information. So here's 13 market moves view, the way we are interpreting the option chains. Now, there's many ways to do it. Some of them are highly complex. Just stick to the basics, guys. The market should not be complicated. Your goal as a trader is to break it down to as simple as possible to where you could take action on some of these activities that are going on. Now, it won't hurt you to develop a Sherlock Holmes type of mentality to where you should be investigative and really focus on some things that other traders may be missing out on. I mean, certainly you don't want to be like that one guy on CNBC. I'm not sure what his name is, but he jumps on every trade. I mean, every time this dude notices there's like oh, somebody's buying 10,000 calls of this shit. Oh my God, I'm getting in this trade.
Take a look at Macy's, another big trade, 10,000 of the August 29 calls. On a day when Target comes out with that news about their inventories and so forth, people are betting on Macy's upside from now till August. They're buying the August 29s with the stock at 24.
Listen, you can't just observe options activity and make your trading decisions based off that. So without any further ado, here's just some things to consider before you simply jump into a trade based off the call or put volume activity in a particular stock. So we're going to go through a bunch of examples, but I'm going to give you the answer before we go into all these examples I'm about to give you. Here's the answer. Always look at the context. Guys, any particular event in the market should not be isolated, and the decision should never be made from a trading position whether, oh, somebody is doing this, okay? You should step a couple of steps aside and take it a situation from, okay, why is this happening? Why would somebody want to be doing this? Okay, how does this event of a particular action, such as somebody buying 5,000 calls, how does it compare to recent history in the stock activity on the option chain? How does it relate to the expiration? How does it cover, how does it translate into total amount of trade? Because clearly somebody buying 5,000 calls way out of the money at 10 cents, that's a very minimal investment, opposed to somebody buying 5,000, let's say, Google calls, where an average cost of the call is like, $45. So we're talking a few million opposed to a few thousand. That makes a difference. It gives you an idea of what sort of financial commitment is being placed into the trade. And you certainly can't isolate just the call side, whether you see this activity is portrayed on the call side. You also got to consider the put side and see if an equal size bet is matched on the put side as well. Clearly, option premiums in relation to historic average normals should be considered into trying to evaluate what's really going on. Some other things to consider is whether somebody was buying calls at the bid, at the ask, at the mid, because that really tells you whether it was a bearish bet or a bullish bet. Some of the other things to consider: what is the call to put ratio? So if somebody's buying 5,000 calls, but you look at the option chain on the put side, somebody just bought 13,000 puts. All of a sudden, somebody buying 5,000 calls doesn't seem so bullish, does it? Also, the time frame or the expiration date of the contract should always be placed in a contrast is what could be the catalyst that a particular trader is targeting. Once all things are being evaluated, there's probably a few things. that I'm not mentioning on the slide. But as we're going for some option chain, hopefully you will open up your eyes to some of the things you could be focusing as a trader to make sure that you're not making a rush decision just because you heard somewhere on Benzinga somebody is buying a bunch of calls. It doesn't mean a thing unless you evaluate the context. So here it is. Let's glance at a few option chains here. Okay, so in this particular event, the trader was asking me a question about Carvana. He noticed that there was pretty strong volume today in the 27 strike on Carvana. Now, those were actually expiring next week. We're looking at about 10 days expiration. What he didn't mention to me about was the fact that was also 11,000 calls that were traded right here in the 33 strike, which when we look at the current trading price of $24-25, we're looking for a substantial move higher for somebody to make any sort of money in this trade right here. The stock would have to move about above 33.50. In this case right here, they were paying an average, let's say, of about $1.80. I mean, we're looking for these guys that were buying these strikes right here, the 27 strike. All they need is a move to about $28.80 to break even, $29 to actually materialize any sort of profit. So just looking into this option chain, if we're just to zoom in on the call side activity and simply just observe the today's volume, right? So what we're noticing is there's some activity in the 26 strike, clearly in the 27 strike, and noticeably, this is an important strike, the 33 strike, because somebody believes there could be a move. Guys, somebody believes there could be like a 30% move higher, right? I mean, somebody believes there could be a 50% move higher if they're looking to make any decent money in this trade. So what could be the catalyst? Well, the catalyst is, if we look at this particular expiration that's 10 days out, that would be covering the next week Federal Reserve meeting. And clearly, Carvana is a stock that deals with used car sales, and higher interest rates would definitely not be a plus for this company. Federal Reserve policy, especially if they possibly introduce another half-point rate hike, that would not be a positive for this company. But yet somebody believes that potentially, if we just consider this one fact, right, somebody's buying it. What appears to be an elevated amount of calls. Now, how would you even know if this was elevated amount of calls? Well, you would go back to, let's say, this week expiration. Okay, and let's see what's going on here. What's this week's expiration? Well, you're looking at in the 27 strike, there's like 462 calls. As far as the active volume today, in the 25 strike, you got 1,000. You got, there's nothing in 33 strikes. So nobody's expecting any huge moves in the stock this week. Not to the upside, right? We do have some put volume activity here in the 25 strike, 2,300. So close to the money, they're buying a little bit. They're seeing very, very low activity. This is the highest strike, and it is on the put side with the highest volume for today. And that's 2,300 contracts traded, and it's 25 strike. Basically in the money, at the money. No surprises here, right? So when you're looking at, well, somebody's buying 5,000 going into next week, is it bullish? Is it not bullish? Well, one point of reference would be to look at the current week's contracts, right? So, well, apparently there's no activity, certainly not 11,000 contracts way out of the money. So could this be bullish? Absolutely. This could be a sign that somebody is expecting instead of maybe a half a point rate hike from Federal Reserve next week, maybe somebody's betting, hey, this stock is down from $400 where we're shorting it here at 13 market moves. Now it's at $24-25. Should I be taking a wild bet that maybe if the Federal Reserve does not announce a half a point hike, what if they just announce a quarter point hike? Could this thing potentially move higher? Well, based off the activity today, we're seeing that potentially somebody believes that Federal Reserve is going to get weak. It's not going to do a half a point hike. That would be a strong catalyst for the stock to move higher. So now what we've done is we've compared this week's contracts volume in relation to the next week's contracts volume, and clearly we're seeing a strong increase. In particular in the 27 strike, if we're to give it a numerical value in terms of percentage, right? This week's contracts were at 400. Next week's were at 5,200. Guys, I mean, that's 13x. There's 13 times more contracts activity in the same strike going into next week opposed to current week. Okay, and I mean, this is astronomical because there's like nothing but maybe 100 contracts in a 33 strike in this week's, and we got 11,000 contracts trade going into next week. So based off this, hey, it looks bullish. But what should you consider, right? Somebody's betting on the fact that this stock is way oversold, they're expecting a bounce. Okay, and at the same time, when we're comparing the put to call ratio here, call to put ratio, there's a whole lot of activity today on Carvana. Now, if you're really trying to decipher whether you should go bullish or bearish, a proper action to do instead of just jumping on the call side right here, guys, would be to observe, well, what's going to be the put ratio versus the call ratio on Carvana today. I mean, today it's predominantly bullish. I mean, it's clearly. Nobody's buying puts on Carvana today, seeing a lot of bullish activity. Is this relationship going to change tomorrow? Are we going to see tomorrow this behavior shift where a lot of people are buying puts? So before you jump into a trade like this, especially with next week expiration, it's important to determine, okay, if this behavior is going to change. As you notice, the market's been sideways, plus minus 50 points, plus minus 50 points. I mean, if you're part of the alert group, basically told you that yesterday the market is plus minus 50 points going into this 9th day of the month where we believe some bigger moves are about to take place in the expectation of next week's Federal Reserve meeting and this week's CPI number on Friday. So from the standpoint of evaluation of this week's contracts into next week, this looks like on a relative basis, you have a situation where there's a lot more people that are actively pursuing the call side in Carvana, while very few people are looking at betting against a move higher or possibly a drop. Well, you can't blame them. The stock is down over 90% in the last 6 months since we suggested this stock as a short. Now, I did post a video at some point saying, hey, there's some weird activity going on in Carvana. Somebody's buying a lot of shares. That was when we see some crazy wild swings in Carvana from 55 after hours going back to 100 type situation. So there is some weird stuff going on in Carvana. I wouldn't rule out the possibility of a takeover at some point. I don't think that's going to be next week. I think it's a little bit too early for that. And so this bet, I think, is highly related to the interest rate decision and the CPI number this Friday. Otherwise, I think people would be buying calls after the CPI number release this Friday, opposed to be pulling the trigger ahead of time. Because you got to figure this out, that people they're not just, I mean, why wouldn't they wait till the CPI number this Friday in order to be buying calls? So they think that from here, Carvana stock has a high chance of moving higher. Now, is that information also supported on the chart? That would be the next thing to consider. That would be the next thing to evaluate. So as you can see, just the information, okay, well, 5,000 calls. Is that good or bad? Is that bullish? Should I short it? Okay, you got to look at a lot of things right here. Now, if we're to look at Amazon. All right, recently done a stock split. So 13 market moves, prediction becomes true again. If you watched some of our videos about a month and a half ago, I posted a video. Amazon is going to $100. Well, there it is, guys. It's here, $122. If you pay close attention to the video, you would have known how Amazon would have gone to $100 by the end of May. So we're actually in early June, just a few days off. But the point is, it's here. Amazon is at $100. And as you can see, For example, the number of contracts here, right? I mean, you got 28,000 contracts traded today in Amazon in the 110 strike, got 8,000 contracts traded today in the 112 strike. So if we're to simply ask a question, oh, it's 5,000, oh my God, somebody's buying 5,000 calls on Amazon. Does that really mean anything? No, because Amazon generally has a much higher number of contracts traded than Carvana or some of the other stocks. Okay, so the question again, you have to look at each individual stock. You have to compare the volume of contracts that were previously traded on this stock. See, it's typical for Amazon to have this number of contracts traded. So 5,000 contracts traded in Amazon wouldn't be a big deal on either calls or puts. I mean, there's a 14,000 volume for Amazon today. The point is, you cannot compare, you cannot just ask a question like, okay, 5,000 contracts. Somebody's buying calls. Should I be buying calls? I mean, that's how you see some of these goofballs on CNBC. Well, I'm jumping on this trade. Oh, somebody's just got 5,000. Like, that's irrelevant. Okay, that makes 0 sense just because somebody bought 5,000 contracts on Amazon today. That has zero relevance of where Amazon price is going to be, because you don't know if that same person bought 5,000 puts on Amazon yesterday. Okay, he could just be betting that the stock is going to go sideways and he's trying to make money on premium. He could be selling, calls and puts at the same time. It will be calculating the amounts of these contracts right here. So that just the amount of number of calls being traded does not necessarily tell you the picture. Damn it, wake up, Leonardo. What are you talking? Guys, sorry. I think I just fell asleep talking about option chain. So I'm back. I'm awake. And let me share some stuff with you here that really matters. Okay, enough of Carvana bullshit. Enough of Amazon bullshit here. I mean, it really matters, but I cannot stand going over the basics and shit. It's just not my thing, okay? Let's look at stuff that really matters in the markets right now. I mean, fuck it. Let me tell you the stuff that is really mind-blowing right now. Let's forget about calculating the contracts on Amazon and Carvana. Both of them are fucking doomed, okay? Let's look at this, VIX. So today, just to compare the activity, right? Still going back to the slide where I've referred to you, everything in the market is on relative basis, okay? The volume that's today, is it a high volume or a low volume? How do you measure that? Well, you go back and you measure the historic stats. What was the volume last week? What was the volume before? You would know all that shit if you traded with 13 market moves. But since you don't, at least understand the strategy that everything is measured on relative basis. I mean, if you look to the analysts, the way they're measuring stuff, right? It's quarter to quarter basis. Well, what were the results in quarter 3 versus quarter 4? What were the results on year to year basis? Were you comparing quarter 4 against quarter 4 prior year, right? So everything is on a relative basis. When you're looking at the option chain, nothing different. It's on relative basis. This week against last week, this week against next week, against next month, against the future months. What is going on? What is the catalyst? What should you be paying close attention to? If Sherlock Holmes looked at this chain, what would he think? He would fucking fall asleep just like I did a second ago. So there's nothing going on. Look at this VIX chain. There's nothing, absolutely nothing. Like, this amount of contracts will put you to sleep. Nothing. There's nothing going on. Okay, but if we just rewind it to June 15th, as I posted in one of my recent videos, now, whoa, wow, we're welcome. To the real week of trading. Finally, hallelujah. Something is going on in the market again. Damn it, this sideways shit is going to make you fall asleep. So this is what we've got going on, okay? Look at this number of contracts. I mean, this is sickening. And in relation to what was going on this week, Whoa, next week, the market is right away. Look, we already know the catalyst. The question is, what is the play? How are you going to play this? You want to short this going into the event, which is the Federal Reserve decision that will be announced on Wednesday at 2 p.m., 2:30 conference call sort of thing? Or will you be waiting until the very end after the announcement? Do you pull the trigger? As a trader, this is where the decision has to be made. How do you trade this? Everybody knows the damn event. The question is, why did somebody already, in total, right? This doesn't necessarily mean one particular bank, institution, or investor or trader did this. There's 72,000 open interest on this damn thing right here. Okay, in the like 28th strike. You know, we're at 24. I mean, look at these volumes. These volumes, guys, this sort of volumes in the VIX. I mean, 123,000 contracts, a fucking 60 strike. Wake up! There's major shit going on next week. The question is, will the move begin this week? And I think the move is going to begin this week on the 9th, ahead of the CPI number on the 10th. You trade this right, guys. This is an opportunity of a lifetime right here. 123 in the six, like they expect VIX to double. Why would you? 106,000 contracts in the 65, 114 and the 75. Has the world gone mad? The answer is yes. We've known that for the last 2 years. The world has gone mad. And everybody's just acting surprised now. You think 300,000 contracts on the VIX trading like at, over 200% increase from current. What the fuck? So, but look, people are still in fucking Disney World. Look at this shit right here. Who we're at 24. Chances are it doesn't matter what the Fed does, what the CPI number is, okay? VIX is not going much lower. Like, can it hit 20? Sure, but it's going to bounce. It's going to bounce, guys. There's no, you think VIX is going to go below 20? Like, it's going to go to 16? Absolutely, hell no. There's 5% chance. Yet, there 2, 4, 5. And there's a million contracts being bet on the VIX. The only way these people make money if the shit drops below 20. So what the hell is going on? This is the stuff to get excited about in the market. This is the stuff when you wake up in the morning, okay, somebody bought 5,000. There's major shit that's going on between June 9th and June 17th. The question is, are you going to be a part of it? Guys, this stuff is exciting. This is the stuff you live for as a trader. Do you know how to trade this puzzle, guys? I love it. I absolutely love it because there's going to be some of 13 market move students will make $1 million between June 9th and June 17th. The question is it going to be you? Look at this number of guys. This is beyond stupidity. Very rare do you see an option chain that looks like this in the VIX. That also coincides with pure complacency on the SPY. All right, let me pull up SPY right here. Look at how ridiculous this is. This is what you gotta, people are not buying. So look at the number of contracts in the SPY. This is nothing. SPY, nothing. This is bullshit, okay? There's nothing. So people are not prepared for the bull side or the bear side on the SPY. We should see the number of these contracts go through the moon. And when there is an abundance of demand in contracts, it doesn't matter, put calls, the premiums are going to spike. This trade is so easy. It is you can be a 4-year-old and put this trade together. Okay? This is how easy this freaking trade is. And guys, seriously, if you don't know how to trade this and make at least 50 grand in 5 days, fuck, what are you doing in the stock market? Damn it. Anyways, I got to discover the next trade that's going to help some of our guys make 5 million plus. I got to roll. But guys, if you're trying to get your account from 50K to $1 million, this is your chance. Schedule a call, 13 market moves. Guys, I'll catch you on some other little details. But guys, study the basics on your own. So I record the courses so I don't have to waste time breaking all the little details down. You haven't taken charge divergences, 13 market moves. Guys, don't get me started on this shit. Don't show up trading with a 13 market moves coach unless you know at least the fucking basics. Nobody's got time to explain you and spoon feed you here. Be ready. Do your fucking homework before you show up to trade with a coach. Study the shit out of the courses. Be fucking ready. You want to make $1 million in the next 11 fucking days? Get off your ass. Subscribe. Take the course. Fucking take action. Okay? Just don't bitch and complain. Okay? Be a Navy SEAL of trading, guys. I mean, seriously, like that's the stuff, right? Sometimes I think about this. If I was to tell you right now to drop down, do 100 push-ups, would you fucking do it? The answer is 99% of you that follow this channel, you wouldn't be able to, right? Because it's easier to grab the beer, because it's easier to fucking go fuck off and do some other stuff. That's why you wouldn't do it. And so when I ask you, hey, would you drop down and do 100 push-ups right now? And your answer is, well, I got all these other fucking excuses. That also tells me, if I tell you right now, go and look up 100 charts before you go to sleep tonight, okay, would you do it? No, you'd probably look up 3-4 charts, maybe 10 at best. You wouldn't even know what the hell to look at, and you go back to sleep. Or you go get busy with other shit, and then you'd wake up in the morning and wonder, oh my God, the market is up. Oh my God, the market is down. Like, damn it. Spend some time on some of these details that really matter. And if you're really doing your best and you just need a little help, guys, we're here to help you, but bring the ambition, bring the desire, bring the drive, bring the commitment to get better. I can't help you with your commitment. I can't help people who just want to catch an easy trade here and there. Okay? You're in this for real or you're not. You're in this until you figure it out or until you break and you fucking quit. Okay? You're in this until your dreams come true or you become just like the rest of the 99% of people that give up on their dreams. The choice is yours. What's it gonna be? 13 market moves is the answer for very few of you. And if you think you're that person, click the link below. Visit 13marketmoves.com. Talk to a senior trader. Study the courses, damn it. Let's roll. We're running a contest this week. 50K to $1 million. You hit 1 million from 50K in the next 11 days. We pay you $100,000 in Bitcoin. So, you ready to do this? Let's roll. I'll catch you guys in the next video soon.